Changes are coming to stamp duty as of the 1st of April. So what does this mean for you as a property investor and everyone else? So just a reminder of what stamp duty actually is. Stamp duty, or SDLT, stamp duty land tax, is a government tax, shock horror, which is paid by the buyer of a property, and is paid as a lump sum on legal completion, so exchange or completion of the property, and it's paid by buyers or investors who are purchasing a property or land in the UK above a certain price bracket. And I'll go through what those brackets are in a moment. So the amount of stamp duty liable or payable depends on several factors. So it's not limited to whether a buyer is a UK resident, purchasing a property as an individual or a company, a first-time buyer, replacing a main residence, a second-time buyer, an investor, etc. So what changes are happening? Well, in September 2022, the Conservative government announced a temporary change. So actually, it's nothing new, and that's something I really want to point out. The Conservative government put a temporary change to stamp duty, trying to help people buying property, right? And they lowered the upfront cost of moving home, was the idea, to stimulate the economy a bit, especially post-COVID where prices went up. They were just trying to alleviate some of the pain. So the aim of this was to support housing market, jobs, businesses that rely on it, and those hoping to get on the housing ladder. So essentially what that temporary pause was in the autumn statement 2022, they announced that the increase in residential nil rate threshold will end on the 31st of March 2025. So I don't like defending Labour all that much, but a lot of people are hating on the Labour government, but all they're really doing is saying we're just keeping the same commitment that the Conservatives said would happen. And that's what has happened. So essentially the nil rate threshold, which is currently at £250,000, so you pay zero as a first-time buyer or purchaser of residential, up until 250, it's going to return to the previous level of 125 grand. Now, the reason why this is like, oh my God, is that the Labour government, in all their wisdom, decided to also increase stamp duty for a lot of people by 2%. And so, say for example, investors watching this, prior to the Labour update last year, we paid 3% stamp duty on a majority of our purchases, and then Labour came in and went, oh, by the way, as of close of play tomorrow, and it was literally tomorrow, you're going to pay 5%. And people were like, what the fuck? And that was a shitty move, Labour, you dicks. And it really was a bit of a shitty move. But not because they were right or wrong to do it. It's just every other change was, by the way, this is going to come into play by April. And actually what happened was, oh, by the way, this is coming into play tomorrow. Honestly, I think the only reason why they did that is because they knew about this happening, and it would have been, oh, by the way, if you're buying anything at 240k now, not only is everything increasing by 2%, that nil rate's gone out as well. So it was a bit of a kick in the nuts. So hopefully that will make sense. Let's get back up to date. The nil rate threshold for first-time buyers, which is currently 425,000, is now going to go to 300,000, meaning that they'll go paying from nothing to 6,250 in stamp duty. Now you might be thinking, if you can afford a 400 odd grand house, you can afford 6 grand, right? Well, no, because that's just not how people operate. Usually when people come to buying a house, especially for the first time, you're looking at what you earn, what's the max I could borrow, and then of course you start looking at properties at that level. Now you could go, not my problem. Yes, it fucking is, because it's going to impact you when you want to buy or sell your property, because now that 6,250 that wasn't there, you can't get a mortgage on it, is cash. So the maximum purchase price for which first-time buyers relief, which is a reduced stamp duty rate, can be claimed is 625,000, and it's now going to return to previous levels of 500,000. This is a bit of a challenge for investors. So any changes always create uncertainty. This is like human behavior, meaning investors tend to pause rather than understand the opportunity. So these increased surcharges can put some investors off, and it's impacting their target property values. And you're going to see this, by the way. Here's my prediction. There will be look at articles 2 weeks from this video, and I guarantee they're going X amount of people pulled out of their purchase last minute, because they should be getting informed about this change, and it will hit them in the face like a brick. And you will see announcements like, this many people pulled out of properties, shock. as if it was never coming. Shock across the nation for property buyers. I don't know why they sound like that, but they do. These increasing surcharges for additional properties, it means that investors will need to budget for higher upfront costs. There's some good news in this, I promise you. But it's negative for almost everyone. Sorry. The revised thresholds for higher rates, 250 grand, affect properties, mostly in London, the southeast, and maybe the middle of England, more significantly, where property values exceed these limits. And I'm going to give you 2 examples of this in a moment. And it's going to massively impact investment especially. So it does create opportunity for investors. Naturally, there's less competition, because when there's change, it creates opportunity, but most people react with fear. But on top of that, the barriers to entry are going up, which make it easier for us, for you, for me, to invest and take action. Regions with lower house prices, so especially those in the north, especially Yorkshire, for example, west and south is where we're going to be targeting for this, are becoming more and more appealing for investors, which is really good news and shit news for me. The good news is, if you are investing in the next 6 months, you can expect some pretty strong capital growth, but I'll explain why in a moment. So you're like, where did that come from? So for the ones that I own and the ones I'm buying in the next 6 months, really good, because my net wealth is going to increase, in my case, by millions because of this. The downside is property prices in a year in my areas are going to be significantly more expensive. So not good news, but I'll go through the why of how that happens in a moment. So especially in areas with higher rental yields, by the way, and we target 7% yield properties, very affordable. Good and bad news, because it's mitigating the impact of stamp duty changes. Purchasing properties below this threshold is going to reduce the stamp duty that we pay on this, right? So to give you an idea of a full breakdown of that, you can check out the chart just here, but it really is dramatic as you go up. And if you think about central London, where a lot of people do invest, that extra 2% impact is the gist of it. It's going to be absolutely huge. Now, in our area, it really doesn't matter that much. So let me just give you a small example where it's like thinking across the board. So first of all, it's 3%. Now it's 5%, and now it's going to be 7%, as you can see in the chart. But the important thing is that it's anchored, like we pay our personal taxes. It's not 7% of everything. Okay, it just goes up a little bit on the thresholds. So for example, a £300,000 property as of today, which is, by the way, a very standard investment price for Midlands and below, 300,000, you're going to be paying, as of today, which is insane already, 17,500 in stamp duty. That's almost a deposit for a property up north, right? Now, as of the 1st of April, if you complete on a property the 1st of April, that's now £20,000. Now you might go, it's 300 grand property, 2.5 grand. Yeah, but it's not just 2.5 grand. It's 2.5 grand after it increased about 6 months ago. So 150,000 in the north of England, for example, is going from 7,500, ouch, to £8,000. Now in our particular areas, our average purchase price is 130,000. And so the reason why I'm pointing that out is, think logically here. Both impacts investors, but people that invest at the lower end of the market, like 100 to 150, you're getting impacted by a few £100s. Is that still impact? Yes, but not that big of a deal. If you invest in a property at 300,000, it's £2,500. So just to be clear, buy 2 £150,000 properties and be impacted 500 and 500. Fair enough. If you buy one £300,000 property, you've just been billed £2,500. Now you scale that across portfolios, it has a huge impact. What's going to be the impact for you as an investor? Well, if you are investing in the South East and London for long-term holds, okay, you're probably going to want to rethink your portfolio approach. So I also invest down south, by the way, but honestly, we're having meetings internally, myself and my business partners, and for the foreseeable, the next 12 months, we're actually pulling all of our investments into the north right now. A majority is anyway, but all of it will be there now for the long term, next 12 months at least. We're going to see a lot of people pulling out of properties in London, and I promise you, 2 weeks from now, check the articles, you will see shock horror numbers of people that pulled out of their property last minute for London purchases, especially in central locations, 1 million and above. you're going to see a surge of investment in northern property portfolios, namely Nottingham, North East and Leeds and surrounding areas in Yorkshire. And you're going to see very strong capital growth. Now for us, we're going all in on this because, as I said, change creates fear for the wrong people, but for the smart people that want to take action, they're going to be investing and taking advantage of this change. So does it hurt me? Yeah, nobody likes to pay stamp duty, but I'm taking account of this full benefit. And what we've seen already over the last 5 years is a bit of a wealth shift. There used to be a real north versus south investment philosophy, and now what we're finding is more and more wealth is heading up north. It started in Manchester, now it's moving to Yorkshire, which we want to play a really big part on, and eventually it will scale into other areas as well. So we do around 5 purchases a month personally, and we do around 200 per annum for us and our investors. And by the way, if you want to be playing a part of that, you've got funds to invest. We typically work with people with 100k or more to invest, so we can actually build somebody's portfolio. Typically takes about 50 to 55k per property in our areas. And if you want to take advantage of that, but maybe you live in London, maybe you live down south, or actually just don't have the time and energy to take advantage, I'll put a link in the description, click on it, or if the link's not working, put portfolio in the comments and you can book in a one-to-one strategy session. Here's what it's going to be, completely free by the way. We're going to map out how you can take advantage of these stamp duty changes and how you can get boring vanilla buy-to-lets and actually increase your wealth. Focus on emerging markets. So emerging markets are going to be where wealth is going to, not where it is. London's a great example of this, where it was getting pumped of money. You look at capital growth in London 10 years ago, amazing. And now it's been very stagnant growth, stagnant or in decline. And then you look at northern cities, for example, South Yorkshire and West Yorkshire, which are my key picks, but there are other areas available. It is an absolute game changer. The capital growth has been absolutely insane. And good news, bad news is there's going to be even more in the next 12 months. So good news for those people that are ready to take action today. Maybe not so good news if you're waiting a year before you do it. So analyzing the market. In short, if you're buying at 150 grand or less, barely an impact on you apart from move faster than you intended to. Okay, move faster. You need to be proactive with this because you are going to have those 250, 300, 450,000 pound buyers coming into your market very soon. And it doesn't take a genius to go, hold on a second, I could buy one property for 450 grand, or I can buy 3 great properties with the same investment. And so the problem for us that are investing in these locations is the buyers that are coming in, they're not just buying one property, they're buying multiple. So be proactive with any purchases going through. If you're watching this, get on the phone with your solicitor, see if you can exchange today and pay stamp duty today. Okay, because if you do this and you are waiting until after the 31st of March, you're going to end up paying more. And by the way, solicitors will be working late. Work with tax advisors to explore relief options such as offsetting stamp duty against rental income, utilising other tax benefits in this. Navigating stamp duty, it can be complex, but working with experienced professionals like your accountant, like your solicitor to get it done can help you make better, more informed decisions. And by the way, if you just want to have that call to set you up properly of how to navigate this market, you know what to do, click the link. This is something where it's just another change. Okay, change creates opportunity. You don't need to be scared. You just need to be informed, understand what impact it's going to have on the market, which ultimately is we're going to see more money going away from southern and central locations and going more up north. And that's simply because of the prices. In the same way that if Leeds were £800,000 properties and London were £200,000 properties, we'd start seeing north to south. So all you need to do is be informed, take advantage of this situation and ride the wave. 12 months from now, it will be too late because it would have settled, the shock would have settled, and then there'll be a re-navigation from north to south. But really, we want to take advantage of this opportunity today. I hope this has been helpful, at least enough to inform you where you can ask questions and I can answer as many as possible. For those people that are fed up of waiting and sitting on the fence, take the action now. Put portfolio in the comments or click the link, fill in your details, hit subscribe if you're new to the channel. I'm going to do more and more videos to keep you informed in property and business. So subscribe, hit the notification bell, and I'll see you in the next video.